My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
All right, guys, welcome to Property Profits Podcast. I'm your host, Bryce Kaminsky, filling in for Dave Dubois. And have you ever wondered how a seasoned contractor turned fix and flip investor navigates the ever-changing real estate market? Well, today, my guest, Emerson Bran from Southern California, is here to share his secrets to success in the world of real estate investing. Emerson, welcome to the show. Great to have you here.
Hey, thank you so much for inviting. Thank you for the listeners, and just thank you for this opportunity to be here today. I'm really grateful for it.
Yeah, it's always a pleasure to have the fix and flip community on the show because it is hard work. So tell me, when you got started in real estate, was it by accident or on purpose? There's always a story. What's the story?
For me, honestly, like it wasn't in the picture at all. I knew in high school that I kind of wanted to dab into real estate, and even took a course and, the online, well, at the time it wasn't online. You would,
Maybe on tapes or on DVD or something.
tapes actually, yes.
Yeah.
Tape. That's
Comes in that big plastic binder. You open it up, pull the tape out, put
exactly,
it in the car.
yes. So, and truth be told, I actually stole the credit card from my mom to purchase the tapes. So
Was it like a Rich Dad Poor Dad tapes, or what was or did you buy it at the middle of the night? And then
yeah,
you
it was kind of yeah, it was kind of one of
some
those.
infomercial running on the local cable
Exactly.
channel. Yeah.
Yes. 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 So, and like all along, I've had this feeling of there's something more out there, right? Our
Mhm.
lives can't just be work and pay bills and just the same BS that we experience every day, right?
Mm.
So I had a gut feeling of like, there's something more, there's something else out there. And, I've always been kind of seeking that. Uh,
Mhm.
went into the military. After I came out of the military, I got into music, actually. I
Oh
became,
yeah.
yeah, I became an agent. I specialized in Latin jazz, Afro-Caribbean music, and did that for many, many, many years. And in 2017, 2018, I was actually also working. So I had a regular day job all the time, and as well as doing my traveling and doing all these things, representing artists and doing all these
Yeah.
things. Right? And in 2017, I kind of was tired of my 9 to 5. So I figured, okay, I got to figure something else out. And how that happened is I knew that wasn't where I needed to be, was because I went off my kid for something that had it made no sense,
Mm.
right? And it just made me realize, okay, I need to get out of this, right? That day I had talked to my dad. Actually, it was 2018 because it was right before the pandemic. I had talked to my dad, and he said he was a contractor. See, he had gotten the license in 2010. He's been doing it all his entire life. That's all he's known. I'm Latino,
Yeah.
so us Latinos, especially when they come to the U.S., that's kind of all
Hard
they
working. It's hard work and they're ready to do it.
exactly, exactly. So, and to be honest with you, I don't think my dad ever had that vision either. And I'll tell you why once we get to it. Um, so 2018, I decided to leave my job. My dad tells me, you know what, I can't do this anymore. I can't do it on my own. I'm,
Mm.
getting older. I'm getting burned out. And he said, why don't you help me? I said, sure, let's do it. Quit my job the next day, started working, helping him with this quote unquote company. At the time wasn't really a company. He was just doing it on a day-to-day basis, right?
Yeah, like a handyman bought himself a job.
Right, right, right. I mean, he was licensed. He was a licensed contractor, but again, the way
Like
that
he had a team or just he was out there?
he had a team whenever he needed one.
There it is. So yeah, he kind of bought himself a job and then hired some help when he needed it. And
Exactly.
so on the tools, in the business, not on the business. And that happens all the time with contractors because they love it and they decide, I can do this without
Well, and I don't
being part of
necess-
another big company. I can just do this.
right, but I don't think they necessarily say I can do this because I love this. It's more like I can do this and I have no other choice. This is just kind of how I make the money, right?
Hmm.
So vision has a lot to do with it. So what I had said earlier was that he didn't have that vision, right?
Hmm.
He had the opportunity 3 times in his lifetime to own apartment buildings, multifamily.
Right.
His boss at the time was literally just telling him, don't worry about it. You don't have to give me any down payment. You don't have to give me any money. So you don't have nothing. I'll just put it under your name. And you don't have to worry about a thing.
Hmm.
At the time, again, he didn't have the vision. He didn't have the knowledge, which is another thing, right?
Yeah,
Especially in
it's hard to value something that you don't understand. There's like a video of someone going around handing out bars of gold on the internet lately, and people are like, "No thanks." They don't understand that he's literally handing you an ounce of gold, which is like $2,000. But they're
right.
like, "Why do I want an ounce of gold? I don't know that it has value." Right?
Exactly. Exactly. And so at the time, his thinking was, how the heck am I going to pay this note when I'm
Hmm.
barely surviving with what I'm making,
Yeah.
right?
Hmm.
3 times he had that same opportunity and he just let it go. Uh, in one instance, he actually met the guy that bought the building, right? And
Hmm.
at the time, they were fairly inexpensive. I think it was a 10 unit um, property. Yeah, 10 doors.
Hmm.
And so he met the guy when they bought the property, this, that, and the other. Years later, he found him, right? At the time, I think he had bought it for like 600, 700,000. Years later, when he met them, he told them that he sold the property for $3 million.
That's gotta hurt.
Oh, he was kicking himself in the butt, to say the least.
Yeah, time in the
Uh,
market on a multifamily, if you can hold 10 years, you'll be okay.
well, I mean, not only in the equity aspect of it, right, and the appreciation part of it, but just imagine, and he lived in one of the apartments. So you can already imagine how much money he was saving, making every month, and just making. I mean, I don't need to tell you this. Just
A
I
missed
know
opportunity. Yeah.
it's a no-brainer. So absolutely, and just it. I mean, it goes to show having that vision. If you're a listener, that means you already have that vision. That means you already know that there's value in what we're doing.
Hmm.
So even if things aren't working out right now, don't give up. One of the biggest things that we always struggle, especially in the construction aspect of it, is cash flow.
Hmm.
We are the ones fronting all
Job
of
to job, lines of credit.
exactly. We're the ones that are basically just buying everything and making sure that everything gets started. And oftentimes we get towards the end and we still haven't gotten paid the entire amount, right? So
Hmm.
um, cash flow is one of the biggest things and it bugs us down. But at the same time, we have to think about the fact of like, hey, there's more that I'm building here. It's not just a
Hmm.
job. It's a company, right?
Hmm.
That's one of the biggest things that, again, as contractors or laborers, most people don't think about how to leverage what you're building, right?
Hmm.
That's something else. That's something that I like to talk about with my workers. If they have that vision, don't
Hmm.
think of like, okay, I'm a framer. That's all I'm gonna do all my life. You can't think of it that way. Create your company. Why? Because first of all, you're not gonna be able to do it all the rest of your life. You're gonna get to the point where you're tired physically.
Yeah, especially in the trades.
Absolutely. So for me, is always think about the value that you're building, right?
Hmm.
Create a company because that company is going to be able to create more value for you in the long term,
Hmm.
right? Um, you mentioned lines of credits, right? All of these things helps in the process. If you're a corporation, it's a lot easier to get lines of credit. It's a lot easier to get
Yeah.
corporate credit. It gives more value to your company when you have all these things.
It's like when you need it, it's too late. You should have been building that towards that a year ago,
Absolutely.
2 years ago, if it's self-employed credit income.
Absolutely. And again, most of the people that are listening, I'm sure that their main thinking is how to create uh, income on a long-term basis.
Yeah, wealth. Yeah.
Right. So again, when you're creating corporations, when you're creating companies, you're not creating companies for the day to day. You're creating a company that you can eventually sell, that you can eventually pass on to someone that's actually creating value,
Mm-hmm.
right? Which is what we should be thinking about. And that's exactly the same thing that we do as investors,
Mm-hmm.
purchase real estate, right? We're not just saying, oh, this property here or this other property here. You're creating a portfolio that's going to increase the value to whatever it is that you have,
Mm-hmm.
right? So same thing with corporations. And that's one of the biggest things that I tell my workers that have that vision, that have that drive, that want to grow.
And to be fair, not everybody wants that.
Oh,
Not
absolutely.
everybody wants
And
that. Some people just want to be a framer until they're 55. And then, I don't
it's
know what you do then. Hopefully you saved up enough. Or maybe you just keep framing into your 60s. But that's hard work. You probably want to get off the tools in your late 40s, maybe. Because you
right.
know enough. Like you don't need to keep firing those nails into those boards. You can get a young guy who's 22 for $15 or $20 an hour, and he can fire the nails into the thing. And you just tell him, this is where you fire the nails in. And now it's a business. As long as you're on the tools heavy, firing them nails into them boards, it's a job. And a lot of self-employed people get trapped in, and it's okay. They like and enjoy the work that they're doing, and they have more control over the contract in their life. And maybe they don't build a business in the sense that it's going to be like a Fortune 100 and there's franchises all across the state that are doing the job. But there's a lot of advantages for even as just a single person with a hired out person to really incorporate and structure it so you can get those advantages, because capitalism is advantage to the people who file the paperwork.
Absolutely.
There's a huge, all the tax breaks that you don't get for just being a guy out there working. You get them for creating a company and then taking advantage of the system that was designed to give advantage to those who take advantage. It's like literally a circle.
Well,
Build a system,
the
take
system for
advantage of the
everybody.
system that was built for advantage for contractors and people who want to start something. That's America.
Absolutely. Absolutely. Um, well, that's the United States. America is an entire continent. Let's not forget.
The United States, Canada, we get those too,
Well, I'm sure.
Mexico
Yes.
probably
Yes.
to some
Yes.
degree.
Yes.
But definitely in the United States. In
Right.
Canada, uh, there's still a lot of advantages, but the tax code is tight on both sides. Like in the United States,
Absolutely.
tax code is advantage
And that's another
those
thing.
who play the game.
Right. That's another thing I tell my workers is like, okay, if you have that vision, great. Just or anybody that's looking to start their own business, right? Don't start. I mean, it's great to start as a solopreneur, but
Yeah.
as you're growing, you need to start figuring out how to create your company. Nowadays, it's not really that expensive.
No, you can get an LLC for like $150 in some states. In
Right.
Florida, it's 150. And then
Right.
you can start writing off the truck and the tools and the
Exactly.
fasteners and the gas, but all those things don't come until you claim that that's what you're doing it with. Otherwise, you're just getting cash in, doing some part-time job for someone here and there and there and there and there, and you claim some income and get taxed like you got paid up the middle, and it can get challenging for sure.
Yeah,
You fall
without a doubt.
behind the eight ball.
Yes. Yes.
So is that how you got into real estate? Is it you guys were in this contracting company? You're like, well, we might as well like
So we
fix these ourselves.
Right. Well, and that's exactly it. So we were, I was doing a lot of, remodeling and
Mm-hmm.
kitchens and new bathrooms and all these other things. And I'm like looking at my dad, I'm looking at the company, and I'm going, okay, we're doing okay,
Mm-hmm.
but we're working for someone else. We're working our butts off. And then these guys are making a lot more money than we are.
Yeah, like
And
I hire you guys go in, do the job, looks amazing. Then I put it on the market, make 50 grand, and you guys might have made 10% on the contract. So maybe 5 grand or something on a $50,000 contract. So
right.
it's like
Well,
the money is an advantage in the risk and the leverage of the person who takes it all on and does the whole thing.
right, right. And nothing wrong with that. I mean, that's what we do, what we do,
Mm-hmm.
right?
Mm-hmm.
Uh, but that triggered that in me. Like, okay, wait a minute. If they're doing it, why can't we?
Mm-hmm.
Uh, It's okay if we can continue to work with them or for them.
Mm-hmm.
But why not look for our own deals? Why not try to find our own way into this?
Mm-hmm.
So, and again, mind you, just like everyone else, we're thinking, well, how the heck are we going to come up with that money? How can
Yeah.
we do this, right? How can... So I took a course, um, with, I don't, is it okay to drop names?
Yeah. Yeah. 100%.
I took a course with Amy Majori, and
Mm-hmm.
you guys know who she is. She's amazing at raising private monies. Uh, and just, it just blew my mind. And it really got me thinking, and it got me talking to the people that we work with. And quickly realized, like, if you have 3 or 4 people that have 20, 30, $40,000 here, we got the money to get a down payment
Mm-hmm.
for a fixer, right?
Mm-hmm.
Mind you, again, at the time, I barely knew about hard money lending, a lot of these other things that we learn in the process, right?
Mm-hmm.
Um, but one of the biggest things that helped me in the process too was that because we already had the corporation set up, um, I took an SBA loan,
Mm-hmm.
and that really, really, really helped me to get started into this.
And it's interesting too, because a lot of people are afraid to get started because they don't know about these creative financing. They don't know about the loans. They don't know about borrowing. Almost like in some cases, if you buy a property steep enough and you get a good enough discount or the motivation's there, in the United States, there's companies that'll do 110%. They'll finance the whole purchase and the renovation as long as you bought it deep enough that they feel secure in lending you the whole thing. And then you can, I mean, sometimes, most of the time, you got to have skin in the game, but there are creative ways to get into properties with no skin in the game. Other people's money down payments, hard money loans, lines of credit. Like you don't have to have cash saved up to get into the game. Someone else does. There's cash that has to go in. Doesn't have to be yours.
Right, right, right. And again, just one of the biggest things is really looking at your numbers, right? So, um, when I got started really late in considering, right? I
What's
feel
late? 30, 40,
I'm 48
50?
now. I'm 48 now. We got started what, 3, 4 years ago, uh,
Yeah.
in the investing world.
Some people never start.
Yeah, that's true. That's true. And
I
and and
started at 30 and I feel like I started late. And then I get these guys on the podcast who come on and they're like 20 and you're like, good for you, man. You got like 2 decades on Emerson here, but you
yeah,
got to do something with it.
that's it.
Time isn't going to change your position.
That's
Doing
it.
something about it is going to change your position.
Yeah. So we got into it during the pandemic.
Hmm.
Uh, so it was interesting. At first, we were extremely scared.
Hmm.
It's like
Is
how
the market going to crash in this? Everyone's locked in their houses, but
well,
then
at the time I hadn't even started, right? 2018, I had just started working with my dad, and we were so scared of like, okay, so what's going to happen with our jobs, right? Because we have projects going, but the entire nation's
can't
shut
hang
down.
out. We
Uh,
can't bring our guys in. It's weird.
So after everybody got over the
Calm down a little bit.
paralyzing, right, after everybody calmed down after the paralyzing of the country, um, we get back into business, right? Okay, we finally are able to go back and start and doing, and next thing you know, it's like we're super busy. Not only
Hmm.
doing
Everybody wants something done on their house because now they're stuck staring at their house,
yes,
and the
yeah,
market went crazy too. It was paused for a minute, and then all of a sudden it was a straight run for like a year and a half for sure.
right, right. So we got started towards the end of the pandemic in the investing world.
Hmm.
And at first it was great, but then the changes started coming in, the rates
Interest
started
rates,
to
yeah.
change. Now you have to, again, when you have hard money loans, everything starts to change. The lenders started changing the rules every single day.
Hmm.
There were deals where we had to go, I think on one of them, we went over like 9 different lenders, hard money lenders, to just to find the right one.
Yeah.
And man, it was just heart-wrenching to say the least. But here we are. I mean, 2024, we're still doing it. We're still blessed, buying properties, fixing. As a matter of fact, I just started a second construction company. Uh, and that one our target market for that is multifamilies.
So like
So
doing unit rates on like paint the whole building,
turnovers, exactly.
do
Apartment
five
turnovers,
units, five
exactly.
bathrooms, five kitchens, five carpets. Yeah.
Exactly. Exactly. So you got to go to where the market's changing, right? Right now, because of
Multifamily
rate.
is a hot topic.
Exactly. Exactly. So I'd like to get into that market in the investing side.
Hmm.
I don't feel equipped enough yet to get there. So I figured, well, let me start off with just the construction aspect of it, just like what we did earlier.
Then you'll know your underwriting's right because you'll
Exactly.
understand like, oh, if I can't find a guy who can do it, I'll just do it.
Right. And that's another big thing.
And you
Again,
can
when
double dip too, right? You can buy it and bring your guys in and pay yourself on that side and get the refi and like,
that's one of the things that we do with the fix and flips, right? Because again, I'm in charge of how much it's going to cost. My cost is different than the cost that would be if you were to hire me
yeah.
to make some money, right?
Hmm.
And that's just the reality of it all. I got to make money,
Markup.
you gotta make money, right? So my cost is going to be completely different than the cost that I give you. So
Hmm.
the way I do it is,
I mean, you could give me your cost. I'll take it. You can come fix my properties at cost. I'm okay with that.
let's JV, brother. I'm all in for it. Let's JV.
So
Again,
then you're getting a better construction cost. You're able to profit more because you're not taking it on the back. I mean, some people actually keep it separated and charge a rate that both make money so that the taxes don't go all in one pocket instead of so they split it up a bit. They're like, okay, we're maybe not doing it at cost, but we're going to do it at like an investor rate. So it's competitive, but some of the income's on the left end, then the profit is on the right. And
that's exactly how I do it. Yes.
there you go. Yeah.
There's tax benefits to that. So for me, again, it's not just the income that I would get from the actual transaction, but also what tax benefits would I get from this, right? And I look at it from every perspective. I love so my um I have a degree in business.
Mm.
So for me, again, figuring out strategies on how to minimize taxes, maximize income,
Hmm.
corporate structure, right? That's extremely important in what we do. And even then, there's stuff that I miss sometimes. So it's always great to talk to other people that do this
Hmm.
to learn from them, and to your point, again, because we all do private money racing, right?
Hmm. If you want to scale, I mean, you can do it without, but it's going to
Right,
be a long and winding road.
right, right. So again, offering a lot of these benefits to them helps out a lot too, right?
So, what
Just
would you say, when you look at everything you've done with the business and real estate, what's your unfair advantage? What comes easy to you that other people find, difficult to do?
well, investors, when they don't have me as a contractor or any
Hmm.
contractor, right? That's a disadvantage for them because I
Yeah.
know that they're gonna be getting a much higher rate because they have to find someone for every single property,
Hmm.
right? That's one. Two is Um, if I just mentioned it when you said, "Hey, you can come and do it," like, yeah, I'd go and do it. Let's JV on it,
Mm-hmm.
giving you a benefit on it, right? Because now you don't have to pay anything for my work.
So like the contracting background, your understanding of it, your
Absolutely.
competitive advantages, you've got the team to execute it at different margins than me as I go out and have to hire you, or maybe not you, but I'm not JVing and I have to hire, 1, 2, 3 contracting and their margin is 15% or 20%. And the job really at cost is like, say 20, but the invoice they send me is 34,750, and that's how he lives because that's as far as his business goes. He's just a contractor.
Right.
He just
And,
does
and
that, makes money.
and for me too, like one of my network, right?
Mm,
Just like anybody that we know that's made a lot of money in this world, they leverage their network, right?
mm-hmm, mm-hmm.
So for me, that's one of the biggest things too. I have architects that are, ready and on the go whenever I need to
Like your
do.
power team. Yeah.
I have engineers that are, willing and ready to go, especially here in California, where Title 24 is super huge right now.
What is
Uh,
Title 24 for those? Like, I'm not from California, so Title 24 is just a label.
right. So Title 24 is basically making sure that any property that is being built or renovated is eco-friendly, right? So we're going to have like the newest and most
Proper
efficient.
windows, most efficient heating and
Exactly.
cooling. Yeah.
Exactly. Just having the most efficient buildings nowadays, right?
And are they giving you like a tax benefits or grants when you participate? Like, do you have to participate in Title 24?
Oh, you have no choice now. So there's no,
Okay, so
there is tax advantages again, as an investor,
they
there
save
are.
money too. The homeowner saves money on better insulation, probably
Oh,
saving
absolutely.
electricity.
Oh, absolutely. I mean, those savings are, but they're minor, right? I mean, I think a homeowner would appreciate it more than we do as investors,
Mm-hmm.
right? Just because again, their bills are much lower. They got a brand new house, and let's face it, most of uh, Canada and the US, the properties are old,
Yeah,
right?
yeah.
I mean,
100 years, 50 years.
yeah, my most recent purchase was 1924 building.
Yeah.
So,
I actually prefer those buildings because they're built very solid. They already lasted 100 years. They'll probably go another 100 years. It's the new ones you got to watch out. Built in the 90s, built in a hurry.
well,
It's like how do you have foundation problems already? You mean you were built in 2003, but it's a cracked foundation. It's like, damn.
as a contractor, I love that. So,
Yeah, fix it up, brace that wall, hydraulic cement, you know. That's a thing that a lot of beginning investors too, if you're not, because like I've never run a contracting company on that scale where we're doing full houses, but that can be really scary when you're just starting out because you'll go down and look at a house and you'll be like, this thing's a wreck. But
yeah,
you walk in and you see the forest for the trees, you're like, this isn't a wreck. This is a dirty house that needs kitchen floor and bathroom paint, and there's money here. So you go
absolutely.
in, you're excited. A new guy goes in, gets anxiety, leaves, doesn't make an offer. So
Right.
that isn't a really great perspective to have, is like get comfortable with what is possible on the contracting side. Even if you don't run the contracting company, always early on leverage the experience of these contractors. They're going to tell you, hey, it's not that bad. Or you might be so green that you walk into a property and you're like, this ain't that bad. And then the contractor comes in and says, yeah, it's way worse than even you think. Like this thing should be torn down. And you're like, oh,
And I've got
so
to tell you,
having that experience
I've
and
had
leveraging it.
I've had surprises.
Mm-hmm. It's a
You
can
know,
of worms
so
business. We're opening cans of worms all day.
absolutely, absolutely. But again, I use that as my leverage. One of the biggest things that we see as investors whenever we get something pitched from a wholesaler, right?
Mhm.
Oftentimes the ARV is off.
Well, maybe not the ARV. They might be like gassing it, but usually
Well,
wholesalers
what
have
I mean,
very limited experience in the cost to fix things. That's where I always find it.
and
They're
ex
like ARV, 350, fix 20 grand. I'm like, you can't fix a door for 20 grand in 2024. Like that number is not correct.
I mean,
At
look,
least 40. Like, what are you guys running on average?
here
I'm
in
usually at $40 a square foot just to
here in
touch a house.
SoCal, I mean, here in SoCal, a full-on renovation can cost 100, 125.
Yeah, on 1,000 square feet,
Yeah,
maybe 2,000 square feet. So
right.
there it is. It's like $50 a square foot. And it used to be when I started in this business, 30. So over a decade, it's gone up $20 a square foot. And that makes it really hard to flip unless you're getting those steep discounts because the construction cost keeps inflating. And it's not even that the guys are getting paid more, it's that material after the pandemic has changed the thing. Like it doesn't even make sense to build new stuff sometimes because you're like,
See,
I'm going to spend all this time and money, build a new building, and I'm not even going to get all my money out. I'm going to be upside down when I'm done. So like, why even do it?
you just hit on something and I was just going to talk about that. Here I live in Los Angeles, right? So
Yeah.
ADUs, additional dwelling units, are
Mhm.
are a hit right now,
Yeah.
and they cost about the same price as a full-on renovation.
Yeah.
So
Drop them
and
in your
again, but
backyard or convert a garage. Yeah.
exactly, even a converted garage is not gonna be any. I'm starting at 100K, just because I know that I have to worry about utilities, where they're coming from, how much am I gonna have to dig on top of the fact that now the code calls for reinforcement of the foundation,
Yeah.
right? So I have to do a lot
Pads.
of underpinning, exactly. So all of these things cost money, right? So for me, I'm starting off my ADUs at easily 100,000.
And they just need the ADU to pay the mortgage. That's the funny thing. It's like the
Exactly.
mortgage cost is so much. People are like, I can't even afford to live in Los Angeles. So I'm going to have someone live in my backyard just to afford to live in Los Angeles.
Right.
And the bank and the financing, they're like on board with these ADUs. They're like ready to finance those, but still, um, it's sometimes cheaper just fix an old house, like fix an old
Right.
house.
Right. But those are harder to come by nowadays too. I mean,
Yeah.
here in the US, I mean, during the pandemic, rates went so low, right? So people were refinancing left and right. And that's another side gig that I did too. I was actually, so I have a note, I was notary at the time.
Hmm.
I was making $4,000 a month just on going out a couple of hours at night to do a signing.
Yeah.
So it was pretty sweet. Uh, But yeah, I mean, nowadays people don't want to get rid of their property just because they know that if they want to find something similar somewhere else, they're probably going to have to pay more than what they're paying right now.
But just to get a new mortgage so that it's been really locked the
Absolutely.
market up because people can't leave until like it's going to be interesting to see what happens when the mortgages come due because like a 5 year rate is typically the max term in Canada. I don't know. I think it's the same in the United States, a 5 year or 7 year fixed.
Right.
And so a lot of those were fixed in 2021 and it's
Well,
2024.
well, a lot of these people went into like a 15 to 30.
Like it's a 15-year
So,
fixed mortgage.
right. 15
Yeah,
year to,
we don't even get that option here in Canada. We're on 5 years
oh
because the
wow.
rate changes so often that 5 year fixed is the average. So every 5 years, we've got a handful of people in Ontario that got a really low rate in 2020, 2021,
Now they have to
and
refinance.
2024, 2025. They're now the CMHC, the Canadian Housing Mortgage Corporation, is scrambling to be like, how do we keep someone in this $3 million house because they're about to go from a 1% interest or 2% rate into like a 7% rate and they're cooked. Like they can't even work more. You can't, they're already both working full time and their credit cards are maxed and the food's going up. And so I don't know what's going to happen, but um, certainly that whole thing changed the financing, the economy. So
Absolutely.
what are you doing to navigate the future here? What does that look like for your business?
So again, so I not only look at my investing side, but I also look to see what I've created, right? So I just
Mm.
started a different corporation that's going to be targeting to the multifamily side. Here in the US, the multifamilies and commercial space, you're starting to see a lot more um, defaults on their payments.
Yeah.
So I think that's something that's going to grow.
Hmm.
And that's kind of where everybody's going, right? Another thing that even though it's kind of slow right now, there's no way that it has to grow, is new
Hmm.
construction.
What they're doing in Canada is the government's actually stepped in and is now giving you a 5% down and a 40-year amortization on the loan to build new things, as long as they meet energy efficiency markers or affordability markers. So the government's now financing the construction because it didn't make sense. For a lot of years, um, the cost to construct would just keep going up and up and up, but the refinance numbers weren't going up at the same rate. So there's like a uh, backlog of new construction. We need to be building something like 1 million houses a year over year. In Canada, we're building like maybe 500,000. So every year we're falling by half. And it's been 5 years since we've been falling by half. So now we're 5 million or 4 million houses behind. And we're
Well,
bringing 1 million extra people in every year. And there's a pressure point that is going to be challenging as we approach 2030 for sure.
right. And that's, I mean, we're in the same scenario here where we're not building enough to be able to provide more housing for people, right? So
Not yet. I don't think yet the government has
our
started
government
handing
hasn't
out
done a
money
thing.
on that. Yeah.
They're helping first-time homeowners, which is a great thing, right? So they're creating more programs for that, uh,
Yeah.
not only at a federal level, but here in California as well. There's state funding that can be helpful for first-time home buyers, and the thing with that is, again, if we don't have enough properties to even sell,
Doesn't matter.
it doesn't matter, right?
It
And
actually makes it worse because now you're bringing more semi-qualified people into an already saturated market,
abs-
running the prices up on the limited amount of property that are in there. So
and
at
that's
least at least in Canada, they figured it out that they've dropped the conditions on most parcels, allowing a regular single family parcel to have a fourplex now, and they're allowing multifamily construction with crazy financing. So for once, maybe I would say that the government's in the right direction, but it still takes investors like us to
right.
take that funding, to take the initiative, and to capitalize. I would say, I'm saying this to all the Canadian investors right now. When the government is handing out money, like
Take
people
it.
are always trying to do their own thing, swim with the current, not against it. If the government says it's multifamily season, you load up and you do that. When they say it's single family season, you load up, you do that. Don't fight the tide. Just go with it.
Well, look, when you think about it, right? The government does all these things. They make it available. The ones that take most advantage are either big fish or rich people,
Hmm.
right? But it's there for us to take too.
Hmm.
It's all a matter of how you construct your
It's
company.
usually the understanding.
Absolutely. And again, to your point, we took a lot of grants during the pandemic because we were already a corporation,
You could.
right?
It's
So
the
as a
people who are
corporation,
scrambling now. They're like, oh, I wish I was incorporated so I can get that business loan. Oh, sorry, bud.
absolutely.
That was a
Absolutely.
2018 thing for you. So
And
deal.
getting monies for employees, getting money for ourselves. I mean, it worked all around, and all you had to do was just prove that you actually used it for what it was for, right? Tax advantage, you got money, uh, quote unquote, for free. Obviously, we're having to pay for all of that now, right?
But it
But
helped. A
it
lot of
helps
people
tremendously.
wouldn't have made it. A lot
Absolutely.
of businesses wouldn't have made it.
Absolutely. And again, I'm not saying take advantage of the system that by par. I'm not saying take advantage of the system in a sense of like, you know, get as much as you can. And we've seen how many.
Well, I would say I think it is take advantage of the offerings. Don't abuse the
There you go.
offer.
Yes, absolutely. Don't abuse. That's a very good word.
I like advantages, don't you? If you had an ace up your
Absolutely.
sleeve every card game, I'd be using it. But
Yes.
don't abuse.
Don't
Don't
abuse it.
abuse it.
And that's the issue that we have with, and that people complain all the time, right, about our government. They're like, oh, but there's people that abuse the system. Yes, I know that we can't do anything about that. but we can be the ones to not abuse it and utilize what's out there for us.
Yeah, it's fair game. It's a game.
Absolutely.
Capitalist.
Absolutely.
So what does it look like? We've got a few more minutes here, but I wanted to touch really briefly on, are you raising capital for your business? What type of business, like raising capital for your flips? And what sort of capital requirements do you think you're going to need in this year?
So yes, I'm always trying to find money to scale, buy more
Mhm.
properties. And to be honest with you, because I have been working on my corporate structures for my
Mhm.
companies, I actually kind of slowed down on the raising monies, but I'm
Mhm.
getting back into that. My goal for this year for our companies is to just do 10 flips. I don't want to go crazy.
Yeah, one a month. Take 2 months off.
At most, yeah. Again, I'm trying to take it slow just because of the load of work that I have,
Yeah.
right? So, um, initially I thought, well, maybe just four. And again, mind you, I live in California, so for me, buying a property that I can purchase it for 700,000, but sell it at a million, 1.2, where I'm probably making 75, 50,
Or
or
maybe
100,000.
10% on the thing. So maybe make 100 grand.
Right. I'm happy with that. I'm okay with it. When you do four, that's for 400 grand, or,
Mhm.
if you get 50, 200 grand, I'm still okay with it.
Don't
Right.
tell the framers and the electricians who don't want to do the work how much you're
Actually,
making.
I tell them,
Yeah, yeah, like go and
you
do it
know
too,
what?
right?
That's exactly it. Because now I have guys that want to JV with me.
Mm.
They're gonna be, I have my framer guys, they're like, what about this house? Like, what about it? Like, can we jump in it? Oh, are you gonna do the work for free?
Hmm.
I'll put in the material
Yeah,
and you'll get a percentage. You're not gonna get everything. You're not gonna be half and half, but you get a
work
percentage.
for equity.
Exactly. They
Yeah,
like the idea, so they're all for it. And again, it's just with people that have that
like
vision.
a bank heist. Everyone who touches the deal gets a piece of the action instead of
Exactly.
like hired guns. We're all in this. We make no money. We make no money. We make
Right.
some money. We make some money.
Exactly. Exactly. So, and it's made a difference too. Again, my cost goes down. The monies that I'm raising for it, obviously we have a little bit more now. Or if we're getting money from the hard money lender, now we've got a little bit more cushion on it, right? That we can utilize to pay bills, to pay back maybe one of our private money lenders.
Well,
Uh,
there's one more thing that maybe I'm sure you would have touched on, but um, when you make the contractor a slight equity partner, do you notice that the work is a little bit better?
yes. Yes.
Notice
And
that they
you
care a
know,
little bit more.
so again, it amplifies. It amplifies because at the end, when the work's done, guess who else is going to help you promote
Yeah, and get rid of it.
property,
They'll
right?
even tell their uncle or their aunt or their
And you
cousin,
put in
"Hey, buy this house. We just finished it. It's
right.
beautiful."
And then guess what happens too in the process of raising private monies? Hey, uncle, I know you got like 20 G's in the bank, and it's not going to make you any money there. Why don't you become the bank in one of our company, on one of our properties?
Mm-hmm.
Now you have
Some money
someone else that's
made.
raising money for you, and they're just bringing the deal in. They're just bringing the person in, right?
Yeah. Pay everyone. That's the Coca-Cola business model. Pay everyone who touches the
I mean,
product.
yeah, absolutely. And dude, it just amplifies. That's the biggest and the beautiful thing about this. I kid you not, my framer has brought me a couple of people to invest with me,
Hmm.
friends that I didn't even think of that would actually have that money. That they're like, hey, I've got like 60 grand. They're just sitting there. I don't know what to do with it. I want to grow it. I
Hmm.
want to get into the game, but I don't know how. Well,
Yeah,
come
well, I can help you. I'll help you get in the game, you say.
on. Absolutely.
So
Absolutely.
if people want to connect with you guys, they want to find out more, really get to know more of it, because we do have a limited time on the podcast here, but they should if they can, reach out, find you? What should they do? How do they find you to really get into the know of your business?
I'm really big on Instagram, so
Mm.
Emerson that Bran, TikTok, Emerson Bran, my website, emersonbran.com. Um, that there
There
you'll
you
see
go.
a couple of things that I'm doing there. And yeah, if you want to find out more, just hit me again. Instagram. I'm always on Instagram.
Yeah,
So
DM me.
yeah, exactly.
Perfect, perfect. Well, I really appreciate you stopping by, Emerson. And until next time, guys, we'll catch you on the next episode.
Thank you guys so much. I appreciate it. Talk to you guys soon.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.